Today we are in Pontefract and we have a block of flats. Now, blocks of flats are really, really interesting asset class. They're very popular. And this is Pontefract, and our results here between us, it's a bit of an all sorts. We're in different directions. We all think it's going to sell for different amounts. But what you really need to do is watch this video to the end to find out what it's sold for and how wrong Piotr is for the first time ever guessing what a property will sell for. I've got a fiver that Jamie's guess is right, but you are going to have to tell us in the comments what you think.
So, I know you guys are all talking about the Home REIT stock that's selling at Allsops. Today we thought we will discuss an opportunity of a Home REIT property that is actually selling in Allsops. So, Piotr, tell us all about the property.
So this is Victoria Apartments in Pontefract. It's a block of 14 flats comprising of 13 one-bedrooms, 1 two-bedroom flat. All flats are subject to ASTs. 2 flats are on terms unknown, and 2 flats are vacant. It's on paper it's generating £55,700 per annum, and no internal pictures, nothing else.
No floor plan?
No floor plan. There's only a site plan of the actual.
What's the guide price on it?
The guide price 150,000 plus, and gross initial yield of 37%. Jamie, you're special.
I'm special.
You're special too.
You specialise in Home REIT. You should
It's
put that on your
yours.
title on
Right.
LinkedIn.
My LinkedIn has no title, funny enough. I might do that. So, lot 17, Pontefract, 14 flats, 55. Just reading it here, 55k of rent. Just doing quick maths, I don't think that they've accounted for all the flats. I think all the flats are probably going to rent for probably 500 quid each. You're probably looking at around 7,000 quid.
Yeah.
I'd expect the rent to be around 85k. So first things first, I think the rent's wrong. Second thing is we have no internal pictures. So we need to figure out a little bit more about what we're going to do. I would be looking to Google the postcode, Google the address. The address is actually the Victoria Apartments. So I'm assuming that it was previously a hotel. There was something on the planning portal. On the planning portal, there'll be details of the room sizes so that we can start to circumnavigate the information that we don't know, so we can start to gain a little bit more confidence. You know, with that lot, I think that's a great lot. I think it's fantastic. I think that, everyone played Monopoly as a kid, right? We all wanted to own 1 house, 2 house, 3 house. Well, this is like the hotel, isn't it? This is it. This is the cash king. I think that a lot of people are going to not buy it. I think people are going to struggle to finance it. And I think that presents a very good opportunity for somebody to come in and potentially be able to pick that up for a very kind of reduced rate. I think that kind of asset's probably going to sell for around 650, maybe 700. I'd expect the flats to probably go for around 50k each.
Do you think that's at the end when someone finishes this project, or is it in this auction?
I think in this auction this goes for 700,000.
You think so?
Yeah, I think 700,000 is around the sweet spot. I'd probably value it around 1.1, maybe 1 to 1.2.
Yeah.
I think you've got a variety of different use cases with it. You can potentially inherit the tenants that are in there. You could potentially work with them. You might need to assess them and see what's going on, because we obviously don't know the circumstances. We've got to imagine the pitfalls. We need to look at the arrears. They're the questions.
1.1 as well. Is that based on a VP, so vacant possession, or is that based on a yield?
I think that vacant.
It's more value with it being vacant than it is tenanted, in my opinion.
I agree. I think it's worth around 1.2. I think you'll find a buyer in both sets of circumstances. I think if you've got a really good, array of tenants that are all up to date and keeping it clean and tidy, I think that, I think most people would still go and pick that up. I think it's a great asset to hold. I think if it's vacant, it lends itself to various different social housing uses. You can look at the likes of Serco or Mears, probably in that part of the world. You've obviously got different providers. They would snap your hand off for that. That's a perfect temporary accommodation space for homeless prevention.
Yeah.
Jess?
Yeah, I think there's loads of options with this property as well. And I think probably even if there's a huge amount of arrears on the property, I think there's enough scope to build in that risk to your pricing. I'd be looking at, there's so many exits, I think, on this type of property. The location's really good. The building looks good from the outside. I don't know how it's cut up on the inside, but I think there's plenty of scope in here to look at, social housing, standard market, depending on the location, potentially short lets or more social impact. There's so many.
And I think it's worth noting as well, I think we talked about this earlier, that, we Googled it for a couple of minutes, and I think we found the builder. And I think it's a builder that you've known in your previous or a few years ago, and you've got them as a reputable builder. Obviously, it's ended up with Home REIT, but obviously we need to consider that it's only been with Home REIT really for 2.5 years. So it had a life before then.
Yeah.
And it'd be really interesting to try and pinpoint exactly when that renovation happened. And I think if we start looking at the planning portal, I think if we start looking at when discharge happened, we then start to build a timeline as to how long that has actually been in its cycle.
Yeah.
You know, it's got no internals. It could be trashed.
Yeah. And this property also, like 3 years ago, it could have been on the market because someone picked it up, obviously the aggregators picked it up, put it together with some other properties.
Yeah.
Home REIT ended up buying it. So there's a lot of probably historical information. Many of the Home REIT properties that were initially on the market put together by aggregators, but those details are there. So you could probably see a
You've
lot.
got something like Rightmove Plus. You can see a lot of this kind of stuff on Rightmove Plus. And I think the other thing is, which is really important, we've probably not talked about yet, is who is the provider on it still? And I think knowing who the provider is tells you a much bigger story as to what's actually probably going on internally. Doing some DD on the actual provider. Have they already gone into administration? Have they already been dissolved? Or is it something that's an active lease where they still have to go through the period of obviously dissolving it after you purchase it through auction? If this was me picking it up personally, I think I'd probably pay $450 for something like that personally, mainly because I've just got a risk appetite, and obviously we do so much volume normally at the lower end of the spectrum. I think it'll probably sell for 625 in my opinion.
Interesting. We already have two fairly punchy guesses.
It's rare to find freehold blocks like that available. They rarely trade in the open market. That stuff normally happens off market. But because there's the terms unknown on 2 flats, because 2 flats are empty, there's a lot more complexity to it. It's not a straightforward vanilla deal. It creates opportunity, I think, in my opinion. So I think 625 is cheap for it still.
Hi, I'm Michael Allison. I'm the Commercial Director at Roma Finance. And one of the things we know are key when it comes to buying properties at auction is the ability to speak to the decision maker. At Roma Finance, you have access to your dedicated underwriter who will take your case from application all the way through to completion.
I like Pontefract. I'm a big licorice fan, so it's a great place. I like the building. The building looks attractive from the outside. It kind of gives a little bit of maybe a false sense of security that the inside could match the outside. It's very rare that the outside of a building is beautiful and the inside is completely trashed. The inside tends to reflect the outside in most of these situations. But I think this is going to sell very well. I just think the income at the moment is somewhat muted. There's the unknown elements, there's the vacant parts, and I think there's a really interesting way that someone can come in under any number of hats, whether it's short lets, whether it's social housing, whatever it may be, and really pump up that income. And by doing so, create a level of arbitrage between yield at purchase point and yield at refinance or yield at sell point. And I think you could run a very old school property business model on this, which is grab it, problem solve it, asset manage it, and then refinance, resell, whatever it is. And I think there's margin to be made. At what level? I like Pontefract. I don't know it well enough on a property side of things. I go there for suites, but I would.
Give us a figure, Jay.
It's horrible because my gut basically
says... It is close to Leeds as well,
yeah,
and it's commuting distance
it
to
is,
Leeds, I would say.
My gut is, for this kind of yield on residential, I get very nervous, so I'd be at a 10% yield max in its current yield, and I would be comfortable with that. But we've seen this Home REIT stuff sell 5-6 times what it's guided for. So to get somewhere close to between people that are dealing with the Home REIT stuff a little bit more than we are, I would say 585, just to be.
Jess?
I was going to go around 550, 575, but I'm feeling like I'm perhaps going a bit low, having heard from you guys, but that's where my gut was originally, even lower than you.
I don't know, I'm like super low. I'm like 475 maybe it will sell for. I think it's... I'm not a fan. I'm not a fan.
I would go to where Jamie is in terms of his numbers because it just feels unnatural to me. But I want to get as close as possible because I think you're probably right. I think it's gonna.
I would go out on a limb and say that it gets certainly more than 675. I think that it definitely goes close to the 7, and I wouldn't be surprised if it goes a little bit beyond. And the reason is because there's certain assets that go to the market in the multi-freehold block space in certain postcodes or certain regions.
Yeah.
And this is just one of those. In the last auction, they sold a property in Wakefield, I think it was, and it went for around £1 million, but the rent advertised was 115,000. That's a big, that's a big number for that kind of asset.
Yeah.
Gone are the days where the opportunist can kind of pick stuff up 50% less than market value. This is now a case of saying, if you want a big block of flats, if you want 14 incomes coming in off a building, you don't want to pay 14 sets of auction fees, 14 solicitor fees. You've got to think about the combined aspect
service
to it.
charge as well.
I buy that, I pay one auction fee. If I want to spend $500,000 and buy 10 properties in Durham, I got to pay 10 auction fees.
Yeah.
So it really, I just think that somebody's going to come in and buy that and really want that.
And even with the change to the multi-unit freehold block, like stamp duty stuff, they're still a very attractive asset. You're not getting the multiple dwellings relief when you're buying these blocks now, but they're still a really good asset class because, as you say, you're multiplying the income that you can get from a single building. And you only have the one set of frictional transactional costs.
I don't know, like once I went, I think that was about 10 years ago, went to Halifax to look at this block of 12 flats. And I had such a bad experience. I don't like that area. Pontefract, Halifax, I don't know, like I would not pay much for this. But it's my personal trauma.
Reminds me of Jamie with Finchley and you with Halifax.
Yeah.
Okay, fair. And this is why we get such a disparity in what people pay for stuff in auction up and down the country, because people relate personal experiences to certain areas, to certain properties, and just people like certain things, people don't like other things. But yeah, I mean, more importantly, it'll be interesting to see what it does sell for in the end. So tell us what you think. Give us some comments below. Is this something, again, that you would buy? I know multi-unit freehold blocks are quite popular at the minute. It is flavour of the month at the minute with a lot of different buyers, institutional buyers still. So yeah, if you are going to be bidding on this, or if you're interested in stuff like this, what would you pay for it and what would you do for it more interestingly? So don't forget to like, share and subscribe. So we'll look forward to releasing the next episode.
Okay guys, so let's wrap up with a quick recap of the auction results. So I was way off this time. This property sold for £670,000. It's a massive 4.5 times the guide price. So that's huge. The yield stands at 8.3% at this price with 4 units vacant or let on terms unknown. So there's still a lot of income potential here once those units get rented. And perhaps some of the units can be uplifted in value as well by increasing the rental value. So there's a lot to add there. But hats off to Jamie for his spot on prediction. He said 700k. This sold for 670, so pretty close, right? Now, overall, this auction delivered some solid results, and in general, auctions in the summer delivered some decent results. And with the recent drop in the interest rates, it feels like the market is starting to show a bit more positivity, and we could be in for a better couple of months, at least until the new budget hits, which might shake things up again. So we'll see how that goes. But if you have something to sell, probably the next couple of months can be a really good time to sell things in the auction. So what do you think? Were you expecting this outcome in this auction and of this property? And also, were you expecting auctions to be doing so well in August, which is normally a holiday month? Let us know in the comments what stood out to you last couple of months, and share with us what you think about our predictions. Now, before we go, we've got something really exciting to share. If you haven't heard yet, we are hosting Property Trading Mastermind Retreat this October in sunny Portugal. So over 5 transformative days, you will learn a full deal life cycle, format, fund, flip, and yes, number 5 is fun. So we'll be joined by some of the biggest names in the property world, including Saif Derzi, who's built an empire trading properties, nearly 400 properties traded so far, and a special guest like Oliver Adams, a high volume trader with over 300 acquisitions in the last year. David Burns, superstar litigation solicitor, who'll be guiding us through some complex frameworks in property trading and raising finance. And each day will feature expert-led talks, personalized mastermind session, and direct advice from industry leading experts that will help you scale deals in 2024 and 2025 and beyond. So this will be a really interesting few days in Portugal. And if you're interested, click the link in the description to express your interest, and Jay will get in touch with you, and also he will share with you directly the website for the retreat with all the details. But that's something that we want to first have conversations with people, see if this is something that potentially might benefit you, then we'll share more details with you. So make sure you click the link in the description, share the details, and expect a call from Jay when you do that. So thanks guys for watching this episode. Please remember to subscribe to our channel and share this with other of your property friends, and see you in the next episode.